Hey guys, and welcome to CT Guides. My name is Theo, also known as Tao Cruz, and today we'll start by going over the bull and bear market cycles, which dictate market direction, and then we're going to finish up with how to identify each using trendline analysis in a daily chart. So bull markets are typically characterized by strong economic growth, increasing corporate profits, and low unemployment. The keys to a bull market are increasing prices. So it refers to a period of rising prices and general optimism in the markets. Also increased demand. So investors are confident about the economy and there's going to be high demand for crypto, stocks, and other speculative assets. And there's going to be an increasing trend. So investors believe that this upward trend is going to continue, and they're going to continue to buy assets with the expectation of making a profit. Buying it low and selling it high. And the length of a bull market, on average, they tend to last longer than bear markets. Average duration there would be around 6.6 years. Now, bear markets are typically characterized by slowing economic growth, decreasing corporate profits, and rising unemployment. And the keys to a bear market are decreasing prices. On the other hand, it's going to be marked by falling prices and pessimism among investors. There's also going to be decreased demand. So there's going to be widespread fear and uncertainty, and that's going to generally lead investors to sell, their crypto or their other assets to avoid further losses. There's also going to be a downward trend. So as investor confidence erodes, there's kind of going to be a downward spiral in prices as that selling pressure, mounts and mounts. And lastly, bear markets, thankfully, tend to be shorter than bull markets. So the average duration is 1.3 years. So much less than the bull market, which is over 6 years on average. We'll go into the trend line analysis here, and I have a chart that's going to illustrate exactly what you're going to look for. We'll start with the bear market here. So in a bear market, when prices are falling, the trend line is drawn by connecting the highs of consecutive downward price movements. So as you can see on the chart right here, we have the red circle right here at the top of the trend line. There's the high. There's another high right here. And falls pretty fast here, so there's not really a high, but it kind of makes one here at the end of the bearish trend line. Those would be the consecutive highs right there for the bearish trend line. And it's obviously sloping downward, and it's acting as a resistance level. As you can see, it's there's a clear rejection every single time it hits near there, and sellers are stepping in to sell at lower prices. And lastly here for the bear market, they're characterized by a series of lower highs and lower lows. So what that means is that here up at our first high, we're going to start there, and we're going to have a pretty hard rejection right there. Going to knife down all the way here. Going to go up here to our trend line, and that's going to be our lower high. And then at the trend line, that's rejected, and then this second green circle is going to be our lower low. As you can see, it made a new low right there, and then kind of tries to make a high right here, ends up being a lower high, rejected the trend line down, and kind of at November right here, that's when the bear market kind of fizzles out, and here at the yellow line into New Year 2023 is when the bull market kind of kicks back on the switch. So in a bull market, when prices are rising, the trend line is going to be drawn by connecting the lows of successive upward price movements. So you see we're going to start down right here. That's the low. There's another low right here, another one over here. And this is kind of a slower bull market right here. And then as you can see, kind of here at this pivot point, things really kind of accelerate with the buying. So that trend line is sloping upward, and it's acting as a support level. So it's indicating where buyers are willing to step in, because as you can see, every time it comes down here, it's jumping off that line. And then the trend lines, as you can see here, they're characterized from the opposite way that the bear market is. So that's by a series of higher lows and higher highs. The bull market really kind of starts, right here, kind of at November, and then in the new year, like right at the beginning of 2023, it kicks off. So we jump up here. We make a high right there. It looks like we're getting a decent bounce. Go down. We make a low, because as you can see, this low is higher than our starting point. It bounces off the trend line up here, up to here, and as you can see, that's a higher high. That's higher than this high right here. Back down to the trend line, higher low. And this is when things really crank up right here. Get up to there. That's obviously a higher high. Down here, low, bounces off the trend line for just a wicked bounce up to all-time highs. And then we down here trying to kind of make a low. Hopefully we can. And that's how trend lines work, and these are the specific things you're going to look for on the daily chart when you're trying to identify one of these markets. I hope you guys enjoyed the video today. If you have any questions, feel free to leave a comment or send me a message on Discord. Cheers.